We can all agree that Canada is the best place you can find yourself on earth. This country welcomes hundreds of thousands of new immigrants every year who come from all races and climates to contribute to and become a part of everything we love as Canadians. With that being said, starting a new life in a foreign country is not without its challenges. Settling in can be tough. There are a lot of things you have to figure out on the fly in order to help you settle in fast. In this video, I'll cover most of the financial information you need to know in order to start a new life here in Canada. My name is Robert, and I'm an accredited financial counselor with a specialization in financial coaching. I'm also a professional mortgage agent with Citadel Mortgages. If you're new to the channel, please don't forget to hit that like button and subscribe, as well as hit that notification bell so you don't miss any helpful content going forward. Newcomers checklist that covers all the basics of personal finance. First on the checklist are going to be some helpful tips that can make your life a lot easier by the time you arrive in Canada. You want to learn everything you can about the province and city where you plan to live. Find information about the job market, skills in demand, housing, cost of living, schools, and more. Gather your educational certificates, transcripts, and degrees. You want to also arrange for an official evaluation to get your academic credentials assessed for recognition in Canada. You want to also ensure that your resume is up to date. And there's several different services available for free immigrant services that offer pre-arrival assistance and newcomer services. Some, for example, are Next Stop Canada, Newcomer Success, and many others resources that are available. You want to open a bank account and transfer your funds, if possible, before your arrival. You want to gather your travel documents in one place, including your valid passport and visa or confirmation of permanent residence. You want to also arrange new to Canada insurance to cover medical costs if they occur. When you arrive in Canada, you'll want to quickly apply for your social insurance number so you can start your job search right away. You want to apply for a bank account as well if you haven't already done so. You also want to find accommodation by applying for a Canadian driver's license, enroll your kids into school, and more. I think it is obvious that a lot will need to get done within your first few weeks of becoming a Canadian resident, some more pressing than others. On the financial side of things, I do understand that new immigrants may be faced with significantly different ways of doing things in Canada. If you are having difficulties adjusting to the financial nuances here in Canada, please reach out to me directly and we can have a one-on-one session that can help you slowly put your financial house in order as you continue to settle into this country. New to Canada insurance. The requirements of this insurance are as follows. It's based on the requirement established by Canada Immigration and Citizenship. Anyone applying for a super visa must provide proof that they have private medical insurance coverage that meets certain requirements. Visitors to Canada travel insurance meets the requirements as it will be valid for 1 year from the time you specify, be issued by a Canadian insurance company, provide a minimum coverage of $100,000, but you can choose to get up to $300,000 in coverage if you're 65 years of age. Coverage includes emergency medical care, hospitalization, and repatriation. It has to also be valid for each entry to Canada and available for review by a port entry officer. I will include a link in the description box where you can sign up for this insurance online. Become a homeowner. Homeownership is a big part of the Canadian dream. 60% of households, according to Statistics Canada, own the dwelling they reside in. Buying a home in Canada requires some preparation. If you are like the average home buyer, you will need to take out a significant mortgage loan and make a mortgage down payment. The mortgage rules keep changing, so you should be aware of any new requirements. Documentation that is required would be a valid work permit or verification of landed immigrant status, income confirmation, down payment confirmation, purchase and sale agreement, letter of reference from a recognized financial institution, or 6 months of bank statements from the primary account, international credit report demonstrating a strong credit profile, or 2 alternative sources of credit demonstrating timely payments with no arrears for the past 12 months. The 2 alternative sources required are rental payment history confirmed via letter from the landlord and bank statements. There is a New to Canada mortgage solution program available for newcomers. Newcomers can purchase a home with as little as 5% insured financing or as much as 35 to 50% down depending on the program. The good news is that working with me as your mortgage agent gives you access to competitive interest rates due to the variety of lenders that I work with, and not to toot my own horn, but you will also get exceptional service to match your mortgage needs. Purchase transactions of 95% loan to value for properties that are less than $500,000 at a 5% down payment would be required. For property values that are greater than $500,000 but less than $1 million, a 5% down payment is required for only up to the first $500,000, with an additional 10% down payment for the portion of the home that's above $500,000. However, sometimes you will have to put in about 35 to 50% down as a down payment in order to buy the home you're looking for. Save and invest smartly. Saving money. Some reasons you want to keep money in a savings account could be to save money towards a down payment on a home, for an emergency fund, vacation, wedding, or other goals. Savings accounts have offered low rates since the financial crisis in 2008, but they are still a great tool for keeping the money you need in the short term or that you can't afford to lose. The Government of Canada introduced a special savings account back in 2009 that is known as the Tax-Free Savings Account, TFSA. You may be eligible to save up to a maximum amount in this account every year tax-free. There are other options available for growing your money in a low-risk environment, like term deposits or guaranteed investment certificates, also known as GICs, as well as treasury bills. Investing money. In my previous video, which was a book review on Rich Dad Poor Dad, I mentioned how Albert Einstein said that compound interest was the greatest human invention. From then till now, I've learned that there are people who refer to compound interest as being the 8th wonder of the world. The historical rate of return from the stock market is around 7%. And then when you take higher risks with the right investment strategy, it can help grow your money faster over time. There are many different options to invest your money, and some people say that in order to do this correctly, you need the help of an advisor. The problem with advisors is that they will most likely focus on their products which may not fit your overall goals. Robo-advisors are a cheaper alternative if you know the basics of investing. For this reason, I always recommend that people visit moneytimecoaching.com and book a one-on-one session so they can learn about the investment basics for all types of investment vehicles. This will help protect you from churning, which is when a financial advisor makes unnecessary trades on your account to boost their commission. Churning is hard to prove, especially if you don't know the basics of investing. Your advisor would be less likely to take advantage of you in this way if you booked a one-on-one session and learned more about investing to begin with, in my opinion. Open your first bank account. Types of bank accounts available in Canada are similar to what you would be familiar with back home, even though the names may be spelled a little differently. In Canada, it's called a checking versus checking or current accounts in other places. The two main types of bank accounts you will encounter are the savings and checking accounts. A checking account is where you keep the money you require for day-to-day transactions. For example, to pay groceries, transit passes, gas, utility, rent, phone bill, and other types of bills. The bank will also issue a debit card to accompany your checking account, so you can use this card to make payments at the point of sale or online to make withdrawals at an ATM. Checking accounts also allow you to make payments using checks, and it is the account where your salary is deposited. A savings account is where you can keep funds you don't need right away, so it can earn interest. When you need money, you can easily move it into a checking account. In order to open a bank account, you will need the following documents: social insurance number, 1 to 2 pieces of identification, such as a Canadian driver's license or a permanent residence card. Financial institutions where you can open your bank accounts are traditional banks, credit unions, online banks, and trust companies. Generally, banks will charge you a monthly fee that ranges between $4 to as high as $30, depending on the account package that you choose. However, paying monthly fees for checking accounts is something that can be avoided if you look at digital bank like Manulife or Tangerine. What my clients have brought to my attention is that many traditional banks also offer a Newcomers, a banking package that waives the account fees for 12 months. However, it is good to be aware that these new customer packages may come with preconditions that you will need to meet before you qualify for the offer. For example, you may need to make an initial deposit of $5,000 in your account. Build credit. Your credit score is a 3-digit number that lenders use to assess your credit worthiness. This provides an indication of whether or not you can be trusted to pay back borrowed money. If you decide to take a loan to buy a car or a home, the bank will pull your credit report, and what they see will determine whether or not you can get a competitive borrowing rate or whether or not you will even get approved at all. New Canadians want to start building their credit as soon as possible. In most cases, the credit history you built up in your home country does not count in Canada. And unless you have the cash to pay up front for all your purchases, you will need to work on your credit score. When it comes to mortgage financing, lenders usually want to see 2 lines that are trade lines for about 24 months. But in some cases, under the New to Canada mortgage program, they can use other bills like the telephone bill or your hydro bill as a trade line. In any case, you want to build your credit as quickly as possible. So visit moneytimecoaching.com and let me know that building your credit quickly is what you want to accomplish, and I can help you achieve this goal. If you're unable to get approved for a standard credit card, also visit moneytimecoaching.com and go to the financial products section and look for a secured visa. I can help you get this visa so you can start building your credit right away. Save for your kids' college. In Canada, your kids have the right to education. Your children must go to school starting at the age of 5 or 6 up until the age of 18. They must attend grades 1 to 12. After high school, they can choose to pursue post-secondary education at a university, college, or a trade school. Post-secondary tuition can be extremely expensive, and is why Canada has the Registered Education Savings Plan. I will include a link above to a video that I did which identifies a loophole where your children can go to university or college and receive OSAP government funding and never be required to pay it back. Canada has a Registered Education Savings Plan, and this helps parents save for their child's post-secondary education. You can contribute to your child's account starting at birth until the age of 18. To encourage you to save for your children, the government matches your contributions every year at 20% up to a maximum benefit of $500 grant per year. What this means numerically is that you would have to contribute $2,500 per year to your kid's RESP account in order to receive the maximum $500 grant per year. The grant is referred to as the Canada Education Savings Grant, and each child can receive up to a lifetime maximum of $7,200 in benefits. This is free money that goes towards paying your children's tuition in the future. If you want to make sure this is done right, reach out to me at moneytimecoaching.com and I can connect you with a financial wealth group to make sure that this is set up and ensure that it's also done right. I hope you found this video helpful in getting you settled in, and I hope you enjoy your new life here in Canada. If you still have some more questions, reach out to me directly at moneytimecoaching.com and let me know that you're interested in receiving a free New to Canada ebook, and I will provide it to you. As always, don't forget to like, comment, subscribe, and hit that notification bell so you don't miss any helpful content going forward. I'll see you in my next one.
Subscribe now.